Our next guest, Fakhul Miah. Fakhul is the managing director of GoMining Institutional. Fakhul, thanks for being here.
Thank you for having me. Nice to be here.
Fakhul, in a few minutes, you're going to be up on stage talking about crypto treasury strategies, understanding capital allocation. Give us the highlights. What are you going to talk about?
So it's focused around Asia, but broadly speaking, I think the themes are very much global. And what we're seeing is that Bitcoin has very much become a mature macro reserve asset. And so now we're seeing a race for institutions, state actors, pension funds, etc., adding Bitcoin to their balance sheet, acting as a portfolio diversifier, potentially a risk-off asset. So, yes, price action might not be great right now, but accumulation is only growing.
The idea that a lot of us in crypto talk about it is whether Bitcoin is on a 4-year cycle generally. In the last 6 months, there's a lot of chat about the super cycle and the fact that maybe we've broken through that. With what's going on right now, do you feel that this 4-year cycle is still resonant?
I think we still have a 4-year cycle, but it's starting to become somewhat disjointed. And it's reflective of the sheer amount of institutional flow that we've seen come in. So what that's done is it's created a natural liquidity pool and a base to stop, what would have been traditional retail flow, bringing Bitcoin down. And so, yes, price has been volatile, but it's nowhere near as volatile as it was in the last cycle. And I think that's reflective on the institutional capital that's come in. And, mining economics has continued to grow, so hash rate, difficulty is increasing. So, miners are having to operate in tighter conditions, but it is helped by the institutional flow that has come in.
Yeah, so institutionalization and the kind of broader adoption, obviously will dampen volatility because you have non-correlated users. Fakhul, you might not know, I'm an ETF guy, so I always think that when ETFs come online and further democratize an asset class or democratize, Bitcoin, for example, it allows an opportunity to kind of act as an accelerant to institutional adoption as well. Did the ETF being approved and all the flows into Bitcoin ETFs act as that accelerant similarly, do you think?
Absolutely. I think the sheer flow, take the ETFs themselves, the most successful ETFs of all time, the BlackRock, IBIT.
By far.
They're most profitable. That, it accelerated huge amounts of capital coming in, whilst the Bitcoin network and the new issuance of Bitcoin halved. And so the demand for ETF inflows on average was 3 times higher than new Bitcoin being issued. And so what that meant was that there was natural supply and demand economics that only helped the industry and helped adoption.
So what do you need for the next leg up? What do you think is going to be something that you're looking for in the future that could be the next accelerant?
I think continued acceleration in regulation. So we're certainly seeing the US, even the UK, MiCA rules in EMEA being rolled out, and they're starting to be adopted. I think as that continues, it means that what was historically for institutions, pension funds, mutual funds, etc., unable to participate because the regulation just wasn't there.
Right.
They will now be able to participate. And the ETF is a great example, right? Before the ETFs, they just couldn't participate. So I think as we see continued regulation, which I know some people don't necessarily believe in this space, I think it will help continued flow into the industry.
Fakhul, you have described Bitcoin mining as maturing into sort of infrastructure grade as an industry. How hard is it now for the miners, especially, again, considering all the macro conditions?
It's definitely a lot harder. I think the new amount of Bitcoin that's issued has halved in 2024. It will halve again in 2028. Yes, price action has been positive, but a lot of that has been offset by increases in the network difficulty. So ultimately, those miners that have really survived 2025 and that will thrive in 2026 are those that are highly efficient, have low capital cost basis, access to low power, efficient mining fleets. That's going to be important. Those that are running, high amounts of leverage, operating on the peripherals, relying on price action alone, they won't survive.
All right, I'm not going to run a miner out of my apartment in New York City anytime soon.
Not anymore.
Dave. No, it's over. Thank you, Fakhul. That was GoMining Institutional Managing Director, Fakhul Miah.